Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Monday, October 21st, 2024. But before we check out the charts, I just want to ask you to please click like, share, subscribe, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla and daily NVIDIA reports, daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and Apple stock, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% moves or more on those underlying stocks. And you get to see all of this for free. We offer a 5-day free trial up front. So check out wickedstocks.com. Let's take a look at the charts. I'm going to start with this one, a good place to start. We had a sell signal a week ago last Thursday when we closed below this rising 2-month channel bottom. This is a daily chart that is now at 251.01. After settling below this channel structure, we'd mentioned how 213.65 should be considered a 2 to 3 week objective that happened in about 2 days, given the less than stellar robo-taxi event. We've been bottoming out over the last week. We haven't tested in the last 4 days or so, but for a couple of days early on, testing that 213.65, 5/8 downside Fibonacci from the August low against the September high. Still able to contain weekly selling pressures. It does combine with the trend line today at 214.40. This is a good image to also show that there is the very clear possibility that following this pretty decisive sell signal, that Tesla could continue unwinding through or well into November. 176.08 not out of the question, or is a clear-cut possibility, as a 1 to 2 month objective. And we're, not even 2 weeks into that just yet. Now, in terms of clarifying this as an objective, I've been mentioning all along that you could treat this in stair-step fashion because we can bottom out in the 213.65 to 214.40 area, not only for the week, but perhaps well into November. And from here, rotate up into the low 250s and climbing over the next 2 to 3 weeks. And I mentioned that as a tradable idea. And so maybe you've got long, or you exited a short position and you reversed and went long in this low 210s, holding out for the low 250s and climbing. And I think that is a very valid approach. However, if we were to close today below 213.65, my suggestion is to at least exit that long position and consider reversing and once again playing the short side as we move into November, the next 3 to 5 weeks or sooner, then expecting to test 176.08 if we close today below 213.65. This might involve just simply reaching for 175 strike out of the money puts that don't expire. I would go a couple of months, 2-3 months out of that expiration, given the fact I think this is like a 3 to 5 week play to the downside. Until then, 213.65 can continue to contain weekly selling pressures, and above which that 251.01 remains in reach over the next 2 to 3 weeks. And in fact, on Friday, we did, without much fanfare, close above really a 3-week, 1 month roughly channel top. I think this is more like 3-week channel top that today is at 216.44. Now, I've reduced this to a minor point, not because I think it's weakened at all, but because, I don't like to crowd these levels. I just want to keep it simple, 213.65 to 214.40. Is this combination long-term trend line and 5/8 downside Fibonacci. And yes, we did quietly settle above the 216.44 channel top, and that does skew even more so to the upside. Now, in terms of, I was going to call this a session containment level. In other words, 223.43 is the 50%. The 5/8, as I've been mentioning, is 213.65, and I'm talking the August low against the September high. But the 50% has actually been holding to the upside for the last week. And so, I have this actually as a session containment level, able to contain daily buying pressures, but, that kind of flies in the face of everything I've been saying in terms of you should now allow for upward continuation into the low 250s and climbing over the next several weeks. So truth is, should keep it light at 223.43. You can trade this as you see fit. It can contain intraday buying pressures, but if we push, and we may actually open above 223.43 today, and if so, 233.27 would be attainable by the closing bell. We're in this sort of low volatility congestive framework, and all we need is a buy signal with an open above 223.43 to get the shorts covering, the longs coming in to move this market within the day up to 223.27. If we don't test 223.27 today, just know that if we close today above 223.43, this is your next 3 to 5 day swing trade to the upside, anticipating 233.27. But all the while, for the last week, we have a 2 to 3 week swing trade that we advise by buying 213.65, which came into play early last week, anticipating the low 250s and climbing. And so, if over the next few days, 3 to 5 days, we also close above 233.27, then that is your next 3 to 5 day buy signal up to 251.01, which remains a 2 to 3 week objective anyway, above 213.65. 251.01 is climbing at a pretty good pace. And I did draw it out, but I didn't drop it into this newsletter. I will in the coming days, I'm sure. There is a new channel top. If I take a trend line from the August low against the low from last week, and then cast a parallel line coming across like this, that's around 275. And that is our next long-term resistance. And as it turns out, this 251.01, just letting you know, rising channel bottom is climbing by early December to converge with the channel top that I just sort of visually created if you were following it. And there's not a strong point I want to make about that, but I do recognize that even if we were to close above 251.01, it is really around 275. That is our significant resistance through the rest of the year. And only if we were to close above 275, talking to you big picture traders, would I then anticipate meaningful gains as we move into later year. Let me see if I can find a weekly chart. Yes. Oh, there it is. It's actually already drawn on the weekly chart. I forgot about that. 274.38. This is the structure I was wanting to tell you. And then inside that, we have the former channel bottom that today's at 251.01. They converge in early December. And if settled above 274.38, would be a clear buy signal as we continue through the rest of the year and into Jan, Feb, 333.19. Expected, I'm going to say 2 to 3 months of closing above 274.38. But why spend too much time on that when it's not going to happen today? That's for sure. Let's cover the downside, that if we happen to, and I'm just going to go with close below 213.65, that is your next sell signal. So if you're long, anticipating 251.01, my suggestion is to at least get out, consider reversing, going short, maybe reaching for those 175 strike out of the money puts that don't expire for at least 3 months. On the way down, we would have 203.87. That is the high of the low, likely to bottom out there for a day or perhaps the better part of a week. And 191.76, that is the low settlement price, going back to August, etc., etc., on the way down to 176.08 if we close below 213.65. For you big picture traders, though, and I know you know this if you've been listening for the last, few weeks, that it was the settlement below 251.01 that just may yield this 176.08 before it's all said and done. It's just in terms of the near-term stair-step approach, 213.65 is your next down pivot to act on in that regard. I'm going to leave it at that. Please click like, share, subscribe. Check out wickedstocks.com. Take advantage of our 5-day free trial. We offer daily Triple Q, daily SPY analysis, 2 stock picks every week, weekly Apple stock analysis, S&P 500 index, NASDAQ 100 index, etc., etc. You can see it all for free for 5 days at no cost to you whatsoever. I'm going to leave it at that. I'll be back tomorrow, of course, with Tuesday's Tesla. You have a great day.